If you are an estate agent, letting agent, or someone who's interested in the property market, then this, the UK Property Market Stat Show, is for you. Today, I'm joined by special guest Bryan Mansell. We'll come to Bryan in a second. And this show is looking at the property market in the UK right here, right now. An awful lot of stats out there. The land registry is 6-7 months out of date. The Halifax and Nationwide is a couple of months out of date. But if we are seeing what's happening on the market right here, right now, we can see where the property market is going to be going. We're going to be looking at listings. We're going to be looking at price reductions, sales agreed, fall-throughs, and net sales and exchanges. Well, this week, we're joined by Bryan Mansell for the Week 48 show, and Week 48 is Monday, the 27th of November, all the way through to Sunday, the 3rd of December, inclusive. This will be the last show of the year because December stats do tend to drop off, although it is my intention to have a year-end special and more details of that to follow on my social media platforms. The show itself will last approximately an hour long. On the first half an hour to 35 minutes, we'll look at the national figures. We'll then spend a couple of minutes looking at the regional figures. We don't spend too long there, but you're able to download those free of charge. And then finally, we end up at a town or a city. And this week, we are going to the metropolis, Bryan, of Grimsby and Cleethorpes in northeast Lincolnshire.
Fantastic.
Have you ever been, Bryan?
I have, yes, absolutely. My brother's got family there as well, so they got quite a bit. But great part of the world, great people.
Good stuff, good stuff. Big fishing port, and yeah, I've got a lot of friends up there. It is nice. And I think what we'll do, Bryan, is let people that haven't come to listen to us babbling on. So shall we dive a Rooney in and have a look at this week's stats, okay?
Yeah, let's get on with it, absolutely.
So as always, I'll just spend. We'll start off with listings. I'll just look at the stats, and then Bryan, you can add your input in. So the week's stats this week are that we have put onto the market 21,824 properties. So the number of listings is dropping off, but as you can see, that compared to 17, 18, and 19. I would expect that in this type of market. Year to date, we've put 1.521 million properties on the market. The average price of a property coming on the market in the last week is 403,000. And as I said, we put 21,824. Thoughts on listings, Bryan?
Well, I remember, we've obviously done a few of these shows, and I'm an avid viewer of your other guests as well. And there was a point I remember middle of the year, maybe early in the year, Q1, where we looked at and we thought, oh, look, it's following a similar pattern to 2019 and 2018 and so on and so on. And it's, it's different to the COVID years. And of course, now we're at the tail end of the year. It's literally followed it all the way, hasn't it? So kind of like a normal market. I appreciate there's challenges with buyers and sellers, but actually the number of listings coming on has sort of tracked around a similar type of number.
Bryan, this is a load of bollocks.
Right.
I've got the wrong fucking stats in here.
Mate.
Actually, mate, it was actually the right one. I was looking at the wrong fucking stats. Albeit one down. I tell you, it's a bit early on the bloody Wednesday morning. All right, there you go then. Okay, right. So apologies, ladies and gentlemen, for the swearing. I just had a meltdown there. Then, fucking hell, I got the wrong stats in there. All right, okay, they are the right stats.
Right.
So this week, 21,824 listings. Oh dear, that was all a bit squeaky bum time. Okay, hold on, let's get back to the graphs.
Now you've got better bounce back ability, Chris. Let's see how you get on.
We'll be absolutely fine. So this week we have got 21,000. Hey, there you go. That's about right, kids. Okay, where were we, mate? Sorry.
We were talking about the fact that, as we said at the beginning of the year, this looks like it could be a comparative year in terms of trend, and it's pretty much turned out to be. Numbers slightly less overall compared to 18. But actually, it's tracked the pre-COVID years.
It certainly has on listings. I mean, to give you an idea, year to date, in terms of where we are with listings, I'll just pull the stat Roonies up, and they are the correct ones. Oh, it's bloody throw me that one, that is. Oh, yeah, come on, get back in. Come on, Watkin.
Bit of real life. This is good, right? We're not. I mean, I know everyone thinks you're perfect, Chris, but look,
I'm,
clearly,
I'm far from perfect. Right, here we go. Right, okay. I've just pulled the stats up now. We are 99.26% year to date of listings compared to the average of 17, 18, and 19. And interestingly, whilst I know we're going to touch on this in a bit, but for gross sales, we are 94.35% year to date on gross sales compared to 17, 18, and 19, and 90.28% on net sales.
What about exchanges?
Well, I would expect because net sales is gross sales minus minus fall throughs. I would say that net sales are going to be almost identical because of the very nature that, in essence, a net sale is going to be an exchange.
Yeah, apart from the fact they won't be tracking at the same time.
They won't be tracking at the same time, but in terms of a cumulative year to date, 90.3%.
Yeah.
Okay. Which is difficult for estate agents simply because of cash flow, costs have gone up. Although house prices have gone up. I mean, in a few of the shows, what we've noticed is that the house prices have gone up by roughly the same amount as inflation. So if house prices have gone up, then your fees have gone up. Now, again, I know your costs have gone up as estate agents, but it's not all as end of the world as some doom-mongers shout out. Again, it all depends on what fees that you are actually getting. Okay, let's get back to the stats. Okay, so anything else on the listings before we move? And
no, I think it's like we've said, it's a comparative. I think you've covered it all there.
Interestingly, I've got the up-to-date information for the end of November. This is the number of properties that are presently for sale, or was on the 1st of December. And we started the month on 633,951 properties, and the yellows and the numbers relevant to them are the same months going back to 2017. It's interesting. Last night I put on a LinkedIn poll and said, how much more properties do you think are on the market today compared to 18? And I did leave a little, I said 30% more, 20% more, 10% more, or 2% less. And thankfully, most people haven't taken the trap. But I would have assumed that a lot of agents would have gone, well, there's a lot more properties today than there was in 18. I mean, when you're comparing it to 21, where there was only 397, that is a big jump. But again, let's be honest, 21 was an exceptional year, wasn't it?
Yeah, that period between 617 and 527, the COVID years, is as we've always said, it's hard to compare. But actually, it is interesting that the number of properties for sale at the moment at 633, is comparable back to 18. Is that 65372 back in 2018? So look, I mean, we've got a market with the only difference between now and then is interest rates, but it clearly isn't putting people off moving home, which is, and it never does, right? Everyone, this is where a lot of people who are not industry experts come out and talk about when markets begin to change that, oh my God, it's all going to be horrible last year. And I remember vividly people like yourself, myself, number of other commentators that are experienced in these markets said this is an opportunity, right? This is not going to be complete, meltdown, because people move. And I would challenge anybody to be worried about this, having worked in the 80s and 90s when the market was horrendous, and people still move home because they had to.
And I think, interestingly, Richard Rawlings made a great post on LinkedIn a couple of days ago. Do go and check it out, where he says we as agents should, if the market is on a falling basis,
pricing correctly.
People want to move because they want to move, and I think a lot of people forget that most people move up market. So actually, a falling market makes things better. It's just that it's their perception. Again, I think an awful lot of overvaluing is done to the fact is that an awful lot of the larger estate agents pay on listings commission. And also I think the type of personality agents hate rejection. The type of personality type that makes them good agents means that they don't like rejection, and therefore they'll do everything in their powers not to lose a property. Although, again, there's an interesting phrase is that you need to be the first choice second agent, and if the property market is slowing down, then what are you doing to capture the property the second time?
Well, Chris, I think the biggest problem in estate agency land when it comes to listings is not any of that, truthfully. I think it is that, but it's the lack of a USP, which means in the absence of anything that separates you from your competition, well, then what does? Your fees do, your pricing does, that's it. So that's what people fall back on because there's nothing to differentiate.
It's interesting. Myself and my PA, we target particular towns or cities when we're looking, because as I'm sure I know you're aware, but some people who are watching, I help letting agents attract landlords to their letting agency. And it's interesting is that all the websites are the same. They've got the word professional, local knowledge, that they all do. We all go on Rightmove, we all go on Zoopla, we all have the sell boards. They're all the same. Hardly anyone has Meet the Team. You'd be amazed how many people don't have Meet the Team.
Yeah,
there's no pictures of. We are in a people business, but no one actually publishes pictures of them. And don't even get me on the subject of doing personal branding and videos. But they don't even put the bloody pictures on it, let alone do. Anyway, sorry, get off my. Get off my soapbox.
I liken it to service stations. You pull into any one of them on any motorway, and they will be exactly the same.
You're absolutely right there. I like that. I'm going to steal that one off you.
You carry on.
Okay. So price reductions this week are on 12,200. Just to give you an idea, ladies and gentlemen, we have been running around on average of 20,000 price reductions per week this year. But obviously the number has dropped off. But as you can see here, it does naturally drop off.
You want to pop the graph back on, Chris, because we haven't got screen share on at the moment.
My apologies. I will punish myself severely. There we go.
I know it's early, but
there you go.
There we go.
See it now. So there's the graph. Is that on average 20,000. Interestingly, for the most of this year, price reductions have been higher than the weekly average, as I would expect, because the number of reductions number of properties on the market certainly been higher, but also agents reducing them as well. The average price of a property being reduced is 363,000, which again the running average is 401,600.
That's sorry, on that previous slide, that is not uncommon, okay, in terms of the trend that you've said, that there was a period in the middle of the year where the number of price reductions was far exceeding what we'd seen before in terms of reaction to the market. But the good news is that when you see that rate of drop begin to slow with estate agents, i.e. they're not reducing as many properties, what you're kind of seeing from that is the market has corrected itself and agents have understood, have learned the market and are hopefully pricing more accurately at the outset.
Or it's Christmas party season. Who knows?
Well, yeah.
Just ladies and gentlemen, on this, this can be downloaded. If you go to YouTube, in the description, scroll all the way down to the bottom. There's a link at the bottom where you can download all these graphs and charts. And as you can see here, we've got national price change. And basically, the green means there's more and red means that there is less. And you can see here, as Bryan rightly says, is that in June, July, and August, we were running an average of around 20 to 23,000 price reductions a month. You all went on holiday in August. You came back, and then everyone was reducing prices, and then as you say, you go in a different downward direction. Interestingly, one of the charts that doesn't get seen an awful lot, but I think it's important if you're bringing this up, so I'll just pull it up down here. Hold on. Here we go. Hold on. Price changes as a percentage of listings. And you can see here, okay, so we have the national figures here. And again, you can download these, ladies and gentlemen, in high resolution. And we'll just take that down to 65. Hold on, there we go.
What you're basically showing the people that are watching this is the number of properties as a percentage that are being reduced and the percentages of the stock they've got for sale.
Yes, the
listings.
Isn't it interesting, though, that there are regional differentiations here? So if you can look, on average, in the Southeast, 70.27% of properties, I'll just make that a bit bigger. There we go. There we go. So the agents, the areas that seem to be really high on price reductions are the Southeast and the East Midlands and the East of England, whilst the ones that are not so good on price changes, but again, that doesn't mean they're not so good. It just means that they're reducing less of them, are our friends in the north, as you can see here, northeast and northwest. So whether is that because Yorkshire agents are more realistically priced with their properties, I don't know, or do East Midlands and the East do they overprice? Again, I just find it fascinating that there are such huge regional differences, and is it
There's a lot. There's a not an easy explanation because, as you quite rightly say, there's a number of reasons for that. But actually, when you take a specific town that has a portfolio of similarity, all right, a similar portfolio, i.e., 80% of the stock is a two-bed terraced house, well, then it is significantly easier to get the pricing right from the very beginning. When you're taking a stock, and take it where I live in the Lakes, you draw a circle around me of 5 miles, you'll have no two properties are the same, So how do you get that right? And or how do you get it close, I should say, because you're not supposed to get it right. So that has a big factor in this as well.
Good stuff. Right then. So let's get back to the normal stats, and we're going to move on to gross sales. Okay. So this week we have sale agreed on 19,057 properties. And you can see on the graph here that we are tracking 17, 18 and 19 quite nicely. A cumulative gross sales year to date is just over £1 million. The average price of a property selling this week is £351,600. Thoughts on this, Brian?
Well, again, I mean, no surprises there. You've just taken the graph off the screen.
I'll bring it back. There you go. Sorry.
Yeah, again, no surprises, following a similar trend. Although slightly, as you can see, when we talked about this in the middle of the year, there was a bit of a, and it's absolutely natural, bit of a drop in sales because people weren't attacking the prices as quickly as possible. So there's always going to be a bit of an anomaly in the middle of the year where you attack the stock to get the properties into the right sort of pricing strategy, which then naturally what follows that is an uplift in sales. And I guess we're still, seeing the remnants of that because as you can see there, the graph around week 20, week 35, where there was a bit of a dip, people away, the number of sales have picked up and then continued on a relatively steady basis in comparison to the years before, where they've been a bit up and down as we got towards the tail end of the year. So it kind of shows what we knew would happen. Get the stock on, get the prices down, sales will follow, but that trend will take a bit longer if you're not getting prices down as rigorously and as savagely as you needed to do to get to effect a sale. And of course, we've seen the market where estate agents are facing a year that they haven't had for a long time. And so, of course, naturally, they will dip their toe in on a price change. It won't be effective enough. Then you'll have a 4-week delay. Then you do it again. And then the second time round, it actually activates the sale. What they've probably learned is let's get it cut correctly at listed correctly at the right sort of price and be brave with it because we've now got comparable sales to show prices. And if we are going to take something on that might be not at our initial price, we've got to work that down as quickly as possible. Otherwise, we're just going to, carry stock that will end up being withdrawn or sold through somebody else later on.
Interestingly, at the start of the year, we for the first month, we were about 100% on 23 versus the 17, 18, 19 average. She then started to drift to the 97s and 98.6s throughout the spring. And then in the summer, she dipped down to around 95. And then she dipped down to 94 in August. But since August, we have been treading water at 94%. In fact, we're going slightly upwards now. Not much, but the rot has stopped. So again, I think you're absolutely right, Brian. We have to revisit our traditional estate agency handbook, Estate Agency 101. And again,
Chris, sorry to interrupt you, but this is something quite significant to mention here, because since I last appeared on your show, I've actually been out listing with an agent, and I won't name them, but I had a wonderful invitation to head to a northern seaside town, which I spent the day in, and I went out on 3 appraisals with them, and I actually engaged in some pitching whilst I was doing it and chatted. And actually, it did remind me of how in some cases, no matter what evidence, preparation, research you've got, when you're sat on a couch and the person selling says, yes, but I need to get this for it, it's a very difficult thing to do because you know you've got someone coming in after you and you've had someone before you who, as she evidenced, well, they told me they could get that no problem. And you're now having to have a conversation, say, look, that's not right. This is where the market is for this property. Yeah, but I need to get this for it because I can't pay my mortgage and da-da-da. It's a very unique set of circumstances and very challenging for agents. So it is absolutely correct for them to try something, because you never know. Try and get it on, but then you've got to educate through statistics and evidence as quickly as possible that, look, we've done our best at this. If you want to sell your house now, this is where it needs to be. What do you want to do?
Well, you take words out of my mouth, because what I was going to say is this: is that if we had the Estate Agents Act 2024 to replace the Estate Agents Act 1989, is it 79? Sorry, yeah. Okay. Obviously, the year you were born, Brian. Yeah, so
71, baby.
Okay, same here, but we're only wishing. One decree I would say is the person that puts the houses on the market must be the person that manages the vendor and doesn't leave it to floss, who's only been in the estate agency 2 years, who doesn't know how to get the prices down. If you put the house on the market, then you have the balls to take the price down when it doesn't move. And don't give me that BS. Ain't got enough time, because I'm calling BS on that.
No, I just think the bit you've missed there is that you should be training whatever her name is. If she's been there 2 years, she should be trained by now to do those conversations.
You are training. Okay, then. I know your missus is a trainer, but here you go. This is the thing that blows my mind. Okay, there are about 10 to 12,000, depending on which metric you look at, firms in a state agency. Okay, brands. We get rid of all the top 50 who are large enough to have their own training department, although most of them don't, but some of them do. Okay. I challenge anyone to give me 10 estate agency trainers in the UK. 10 estate agency trainers to go between 10,000 bloody estate agents. And don't get you.
Think they're trainers, don't they? They like to think they can. They think they can do it, but they don't.
What? You went on a course with bloody Countrywide 20 years ago, and you still think? I'm thinking, sorry.
No,
mate. No. Remember, you had the course notes, but let's be honest, you were only there for the sandwiches at lunchtime, and you didn't take notice of it.
You've still got the folder on the top shelf of your office with all neatly leaned up that you've never looked at.
Yeah, I do find it fascinating that we think we're professional, but none of us actually do any professional development.
I know, it's unbelievable, isn't it?
It is unbelievable. Right, let's get back off our, we are soapbox heaven today. Okay, so so number of sales agreed, just over 1 million so far this year. As I said, the price agreed 351. Interestingly, this is a graph that we like to look at.
Yeah.
It's a new graph the last few weeks. We look at the average price coming on the market versus the average price of a property selling. That doesn't mean it gets dropped that amount. It's just that the lower price properties have a higher propensity to sell, which means it's going to drag the average down. The average of that this week is, hold on a second, is 15%, which is still below the long-term 7-year average of about 17%. But if it's somewhere in those mid-late teens, it is a good thing. If it's below 10, then it starts to ring alarm bells. And if it's over 20, we're getting some toppy properties coming on the market. Right, where were we? Let's get back to the graph. Arun is. Okay. Fall-throughs. Okay, so this week, fall-throughs are continuing to drop with 4,548, which is the fantastic week for full.
No surprise. We've got more agents using Gazelle than ever before.
No. It's only taking you 20 minutes to drop that one in, isn't it?
It's taken me 3-5 hours of your shows before I drop that in. I've never done it before. No, it's good news. It's always good news to see that coming down.
Good stuff. Right. Okay, then let's just where we go. There we go. Percentage of properties reduced this week are hold on a second, we'll just pull the 2 seconds. There we go. 23.87%, which is the first time for a while. Well, no, actually last few weeks as so 23.87%, which is, again, let's just look at where we were a year ago. We were knocking on the door of 40% when we had the Liz Truss budget.
Yeah.
Oh, here we are, 23.87%. So we're below the 7-year average for all 7 years, not just this week, but the whole 7 years. And then there you go. There's that fabled 22. We can remember that. And then, as I said, there's the price reduction. There's the number of fall throughs based on this week on a standalone basis. Any thoughts on this, Brad?
Just like I've always said, it's still a £1 billion problem. If you've got prices beginning to rise, commissions rising, and your deal still doesn't get through, it's still going to be a pain. The bigger problem, though, is what we're not looking at here is the amount of time that people are spending on this, and the amount of time people are spending on, on getting transactions through in agency. It's a misallocation of biblical proportions of time being allocated to a very, very long transaction. And obviously the news this week, which I definitely want to have, I've got a question to pose to you before the end of the show with information up front, is this, could this be the start of a re-engineering of our process that actually starts to make everything much better for people? I hope so.
Well, it's almost I have no issue with hips. I think it's hips by the back door, isn't it?
Yeah.
And so nothing wrong with that. As long as it is run well and it is policed well. And again, I just think it is, ladies and gentlemen, we're not in the job of promoting, but I think it is important that Bryan runs something called Gazelle. Now, there are other who run what's called reservation agreements. There are other firms out there that do reservation agreements. So let's just get that out of the way. But the reservation agreement, your fall throughs are in single figures, aren't they, Bryan?
5%, well, just less than 5% now, yeah.
Okay. We've said before that the fall through rate this year is 25.61%, which means that 1 in 4 of your properties are falling through because, and that's lost money. Whilst with reservation agreements, Gazelle, other firms are available, you've got 1 in 15, 1 in 16 properties falling through, which means that less people are going to be more people are going to move. You're going to be paid more. It's a no-win. It is a win-win. Situation. And I think an awful lot of the issue is you do need your team on board on this, with reservation agreements, especially your valuers, don't you?
Well, I think, yeah, I mean, this is not the platform for it, but there's a bigger, the thing that we've seen that has been far more dramatic than any change in fall through rates has been simply making people feel much better about themselves when they agree a sale. The agreement that we create is designed to wrap itself around anything that's agreed between a seller and a buyer directly. And that just makes them both feel much better. So your sales are starting in a position where people are happier than they would be without it, and more certain. And that is a better place for everyone to be. Whether it falls through or not is kind of largely irrelevant, because there are some things that you just can't stop from breaking. But actually, if you can make people feel better about a process that they are extremely nervous about, then the world's a better place, in my opinion.
Excellent. Right, net sales. So this is on a week-by-week basis, we have so many properties that agree a sale, and then we have a certain number of properties that fall through from your existing chain, take one away from the other, and we have the number of net sales. And this week, the number of net sales is, hold on a second, 14,500, Bryan. Okay. I just wanted to check that because I want to do it what I did before. I've got more windows open than the angle.
Hotel, yeah.
Yeah, and I'm just going, oh my God. Okay. Interestingly, for the third, we have broken through the 17 to 19 average, which I think is fantastic to see, which means now that this number here at 90.3 is actually rising. Okay, it's been drifting downwards for quite a while, but it's now rising. So we are now, okay, it's not going to match we're not going to get up to 17 to 19 in the next 4 weeks, but the rot has stopped. Okay. And it is net sales that are going to turn, that basically are your exchanges. And
sorry, Chris. Yeah, the thing is, it's going to be very interesting to see Q1, okay? Because when we get there, what have we learned? What has this year, which, August last year kind of caught everyone by surprise. They were slow to react. The market began to show that sign in the early part of the year. And then we've seen the graphs. And actually, even though the net sales are down, the recovery has been very clear. And it's a case of, what are we now going to do differently going into next year? What is our approach going to be? How are we pricing? What have we learned? The thing that scares me the most about our industry is, do we learn the lessons of success? And what I mean by that is, we're regularly looking at things that have gone wrong, but actually we should be looking also as rigorously at things that we've done right. And actually, how has that, how have our numbers recovered? Let's look at the 10 sales we've done recently, and what can we learn from that data? When do we get it on? What do we do with the price? What do we do with the call out? How many people viewed it? So on and so on. Now, is there a blueprint that we've got that we can now use as our operating strategy for 2024, rather than just go, oh, we've just done 400 grand, it was down on 450 the year before, let's hope, I reckon we'll do 600 this year, which I'm afraid is most people's business strategy meetings. And then they put that on the negotiating staff to try and deliver high numbers when they're not actually properly looking at what's happening, getting into the reads of it.
Absolutely fantastic insight there, Bryan.
Do that, we'll have a solid year. They'll have a really good year next year. Whatever challenges they've had this year, they will be able to build on that and improve it for next year and have a better place to be in a better financial position, a better, have the staff more motivated, etc.
So in essence, what you're saying is, learn what you've done well, learn what you haven't done so well, and take the lessons from both to make 24 a great year.
Okay. There's things like, one of the a really important takeaway here is, why don't you contact your 10 most recent exchanges, sales, listings, whatever, and do a survey with them. What would you do differently, Mr. Seller, Mr. and Mrs. Seller? What brought you to us in the end? Have we got the source of how they came to us, so we know what's working? Let's do more of that. What have you enjoyed about this process? Right, let's take these, and now let's nail this down. This is our blueprint for success, and we are going to now rigorously process that and deal with that with all of our clients.
Can't say much more than that, mate, so I'm not going to ruin that one. Okay. So the percentage difference, right, so these are the graphs which we looked on the graph before, between the average price listing, average price sold. This is in a bit more detail for you data geeks out there. Price changes as a percentage of listings, or at 56.1%, which is higher than the 7-year weekly average, and gross sales as a percentage of listings. Again, we're at 87, which is more than the running average of 76. Anything you want to say on this one?
No, just really encouraging that, at the 87%, it's creeping the right way. We're selling more of what we've got, which is always good, because an instruction is a cost liability on an agency business until it becomes an asset, which is when it exchanges. So the quicker you can get that cost class into asset class, then the quicker you're going to make loads more money and be happier. So
excellent. Good stuff. Right. Okay. So, ladies and gentlemen, we have these graphs here for all the regions: East Midlands, Inner London, Outer London, Southeast, Southwest, Wales, Northeast, Northwest, Yorkshire, and Scotland and Wales. They're all available to download, and we're not going to spend too long on these, simply because on YouTube the resolution isn't brilliant, and also we can spend hours on this, and we don't want to take up too much of your time. But you can download these for your own benefit going forward, and compare your office against the regional picture. And we've also got some other graphics here which show you how, stuff like gross sales as percentage of listings, price changes as percentage of listings, and fall throughs, net sales, and other groovy stuff. What I wodd say to you, ladies and gentlemen, before we move on and look at the town focus, is that all the graphs are available to download free of charge. All I ask is that, and you can use them on your valuations to show that, and your valuers can use them to show that you know what you're talking about if you need to get a price reduction and stuff like that. All I ask is that they're not used on social media, but you can use them internally and at valuations. Okay, Bryan, shall we, any thoughts before we move on and go to Grimsby and Cleethorpes?
Well, I've got a question, and this might scupper your your process, but I've got a question that we might not have the answer for today, but I think it's definitely one to pose on social media, maybe for your audience. But with the release by trading standards of the mandatory upfront information now on property sales, property listings rather, has the industry, like everything else, sort of boiling a little bit. What do we believe that transparent property information being presented upfront by a seller to an agent to the market, what impact will that have on pricing? That's the question. I've got a view taken largely from my time with HIPS. Market's very different compared to 2007 and 2008. But I'm interested to know. So, and listen, let me give you this sort of theory. You know, you go around to Mrs. Miggins's house and she tells you that, you know, this is my lovely house. And you think, oh, yeah, great. This is going to be 450, 475 any day of the week. And then she tells you, because she has to disclose various construction, various other elements, that she's got crap broadband, rubbish, you know, she's got 3G, she's got damp in the back bedroom, and so on and so on. You've now got to share this information regardless of whether you want to or not, and you've got to do it in print, and you've got to do it on your property adverts. How is your psyche going to change about the price advice you now give to that client? Are you still going to go down the road of let's get it on and see, knowing that it's going to be a challenge, or are you actually going to be more concise now and say, and take these things into account with your pricing? And whichever the answer is, because we don't know yet, whatever the answer is going to be, it's going to affect pricing one way or the other, which ultimately could have an impact on transactions next year.
You would hope that it would make agents a lot more structured and a lot more aware to put on the property on the right price. I suspect that the vast majority of estate agents, it's all knowing the type of personality type is that, yeah, let's get it on and we'll worry about it afterwards.
That's my fear, is exactly that. Well, we don't know what people are going to say yet, so let's put it on at this price and see what happens.
Yeah, you got to have it on the market. We can always sort it out afterwards. I'm not letting them bastards down the road have it on the market.
But what it does present is an incredible opportunity for agents, for the right people who are doing this job, to actually, you know, forget the fact that, I mean, and for me, this is the biggest, this is my usual, whenever I do these shows, my mic drop moment, okay? Remove the word valuation from your business tomorrow and replace it with advice. We are here to give you advice. We're not here to value your property. We will give you advice regarding the process that you are going to go through to get from this house to your next one. And part of that process is we'll do a bit of marketing, some assessments, some feedback, and then we actually help you with the transaction. Drop the word valuation. Remove the word valuers from your vocabulary quickly, because the landscape, let me tell you, has completely changed with what information you are now needing to get on a property up front. And I think it's good. I think it creates a wonderful opportunity going into 2024 for a re-engineering of our approach to this, for the better, to make us more professional, to make it more upper class, to charge more fees, you know, because this information, this is not something that, you know, you'll worry about later. You got to do it, right? Now, the guidance is very clear. Why don't you actually, you do it and maybe use a third party or do it yourself, but there's going to be a cost. Or you ask your seller to provide that information to you and there'll be a cost. So it presents an opportunity. We are all nervous of going back to the days of HIPS, but this does present us with a way the agents can model it themselves without being told by the government, you got to charge up front for this.
Someone that hasn't looked at the regulations, when does Section B and Section C come into action?
Last Thursday.
So every property currently on the market,
you've got the trading standards are giving you a 12-month window to get this into place. What they've learned is part A, they gave you a run in and said, from that point, you got to do it. And everybody struggled because systems had to be changed and so on and so on. So what they've learned from that and why they've delayed it so long is they've said, look, go live now. And rather than say you've got to do it by, in 3 months' time in February 2024, this is the same time period they did it last time. Instead of that, we're going to assess over the next 12 months to see what progress you're making. And then we might come down and say, right, you've now got to do it, or let's have a bit longer. So what the point of this ultimately is, the estate agents that are watching this need to understand that they've got the opportunity to shape the market the way that we want to have it, rather than looking at classic stuff. The keyboard warriors come out, oh, this is going to wreck everything. Who's going to get this information? This is like hips and all that. Go and do something else, you lot. Because actually, for the sensible people in our industry, this presents a fabulous opportunity for agents to remodel part of hips, however you want to call it that, but do it the way you want to do it. And ultimately, this is not a question of should we or should we not have this information up front? We should. How is it distributed? How is it collected are the questions to answer. And how does it affect the pricing of the property? Because it shouldn't affect transactions, only positively.
Fantastic. Love your soapbox moments, mic drop moments, everything. Okay, what I'd like to do now is do the last part of the show where we go and focus on Cleethorpes.
Go to Grimsby.
Grimsby. Here we go. Okay, ladies and gentlemen, so the purpose of this is we are looking at Grimsby and Cleethorpes. We are using the platform called 20EA Insights. 20EA are a firm, have lots of different platforms. We're just using the Insight platform. This is available for estate agents. They offer a free version. And then if you give them some shekels, you have a much more fuller version, which goes back further in time. I'm not being paid to mention or get any kickbacks from it. I'm just a huge fanboy of the 20EA platform, the Insights platform, because it does actually, if you're actually performing, it actually can prove you, if you want to charge a higher fee, if your stats are backing that up, you can actually prove that you're a better estate agent. So, Bryan, let's dive in and let's have a look at this.
The word you're looking for is it provides logical certainty for people when they're putting across their argument.
Well, there you go. Hey, it's good job some of us are wordsmiths because I'm not. There we go. So for the purposes of this, we are looking at the postcodes of DN31 through to 37 and DN41 as well. Okay. The Insights platform is like a Rightmove Plus report on steroids with a Saturn V strapped to the back with big lasers and glitter balls coming out its nose. Okay. Just love it to bits. As you can tell.
No shit,
Okay, so in terms of this, let us firstly just spend a little bit of time looking at the stock levels. And what would be particularly interested is let's look at just November. So for the purposes of all those postcodes combined, in November 2018, 1,681 properties were sale. And again, not in 18 was 16, then 19 was 17, and then 20 was 17. It dropped down to 997 in 21, and then you can see in 22, 148, and now we're back up to 2008. So therefore, the number of properties that are currently on the market is very, very similar to what was happening in 17, 18, or 19, and especially in November this year compared to the last, in 17, 18, 19, they are approximately 10 or 15% higher. Okay, let's get down to the nitty-gritty. The stuff that the agents really love is let us see who the agents are. So I'll whiz through these, Bryan, and then you can give some commentary. So let's just make it. So we're looking between the 1st of January 2018 and the 5th of December 2023. We're looking at new instructions here. And the average price of a property that's come on the market, the 22,627 properties since the 1st of January 2018, it's been £170,000. And let us see who the agents have been putting the property on the market. So the first one is Crofts. And we can see here that their market share has been bumbling along between 15 and 10%, obviously. Now, I'll tell you what I will do, Bryan, because it just does screw the figures up slightly. I'm just going to take it. I'm going to do full months, I think. There we go, because then that will just give it a little bit more. Because if you put like 10 houses on the market on the first, it does screw the figures up a bit. So there you go. We'll go full months. And you can quite clearly see here that the number of properties that Crofts have been putting on the market, I would actually say it's been drifting downwards. I've got some more information on this in a second. Let's go and look at Jackson, Green and Preston. We've got Lovells, Purple Bricks, wow, Roost, Argyles, Pygate and Chrome. Now, interestingly, Brian, I've put some of these on a graph. So let's just go and have a look at that now. And you can quite clearly see here that Jackson's have gone from 11 down to 10.8. We've got Crofts at 14.5 gone down to 10. Roos, it does say 0 there, but I think actually there must have been a mistake in the graph because Roosts have been at around 10%. So I'll get that changed. Lovels have gone up. Joy Walker have doubled. Not good to see there. Argyles have dropped. Pygate and Crone have dropped. Martin Maslin have dropped. Purple.
I mean, just look at just look at Purple Bricks. I mean, if that isn't a indication of a spectacular collapse of sentiment from the public, reacting to something new, and then actually realizing that something new doesn't work for them in that particular part of the world, or the other agents getting better at what they were doing. But that is quite a spectacular collapse, unless, of course, they've exited completely out of that. Well, they can't have done because they wouldn't be listing anything. It looks to me like a change of lister. Really good local person was doing that, and then they've jumped ship.
It's interesting that in most locations, Purple Bricks on average had around 4 or 5%, 5 or 6% on an average drop down. Now they're probably bumbling around 1.8, 2% nationally. So that is quite a massive drop. I've sorted out Roos out there, but isn't it interesting that the vast majority of the bigger agents have dropped whilst some of the smaller ones. So what I would suspect is, because there's an awful lot of agents in that town, is that the smaller baby agents have come up. And there are some other agents that I've seen that are in the tail here, which are just nibbling away at all of these agents. So not a massive drop there, but again, just something. Again, if I was Crofts estate agent, I'd be worried slightly that I was number 1 in the town, and now I'm number 2. That's quite a drop, isn't it? There's nothing personal, Crofts. I'm just telling you how it is. Shall we just see? Let's just see who the upper quartile agent is. So
there's 2 different ways to look at this. Okay, there's what I call the Apple way to look at market share, and then there's the Samsung way to look at market share, and that is whether you are turned on by unit market share or profit market share, revenue market share. So, I wouldn't be surprised in some situations when you look at these types of graphs, rather than anyone going, "Oh my God, is it Crofts?" Panicking because they've had a 4.5% drop in or 4% drop in market share. They might have had a 10% bounce in revenue. So happy days. So we just don't know.
Okay, so I'm looking at the upper quartile, and the upper quartile kicks in at, my word, the upper quartile kicks in at £250,000, Brian. Again, you've got to remember is that this part of the world is quite low in house prices.
It's different to other parts of the world. Nothing wrong with it. So it's just, just dynamics, regional dynamics at play.
Okay, so we might go for the upper quintile. So so you can quite clearly, so let's just see what happens. Anything over half a minute. Let's just see who the daddy agents and the mummy agents are on this. We'll just wait for the stats to come through, and you can quite clearly see that obviously Crofts and Martin Maslin seem to. That's quite nice and tight.
We're still on the graph that's not changing on on Excel at the moment.
Are we still on? My humblest apologies. I'll just pull that through. There we go. Here we go.
There we go.
So I'm looking here at everything in the Grimsby and Cleethorpes area in the upper quartile. Well, the upper quintile. Actually, it might even be the upper decimile or whatever it's called. I can't put it. Or decile.
The upper part of the market's fine.
The posh end. We'll go the posh end. Sorry, I come from Lincolnshire, so we don't use posh words. And you can quite clearly see here that Crofts, Martin Maslin, and Jackson Preston seem to be but it's nice and tight up there. There's potential and opportunity there for an upper quartile agent. What you've got to remember, though, is that the posher areas are a little bit further south in the Wolds. So there's, so some interesting stuff there. Right. Okay. Let's move on and look at which agent seems to be selling the most properties. So interestingly, you can see in this graph here that Joy Walker in the last year has had, in terms of listings, 5.94% of the market. This year 8.6, and this year 5.94. So instead of looking over the last 6 years, we're now looking over the last year versus the year before that. So you can see here that Joy Walker and DDM seem to be picking their socks up slightly, which is nice to see. And we can see here that Argyles and Crofts are dropping. Martin Maslin are also dropping. So again, it just gives you a flavour, this platform, of what's happening in the property market. This particular graph here shows you what types of properties are selling. And you can see, obviously, mostly it's houses. But interestingly, there's quite a lot of mobile park homes, but I would expect that being close to the sea.
Yeah.
Okay, so interestingly, what we've got here is this graph here. So we've got the 24th of November, Brian, 21 to the 5th, sorry, the 5th of December. Now, we're going to totally ignore, for the second, new instructions or sold subject to contracts. I want to look particularly at exchange and withdrawals, okay? So this is very important. In the last 2 years, on average, if you think about it, and I know you know this, Brian, but for people who have not watched the show before, a property will only leave an estate agent's books if she either exchanges or she withdraws. If a sale falls through and it comes back on the market, it's not left your books. So therefore, knowing how many properties you exchange on versus how many properties you put on the market is a great way to judge of how well you're doing as an estate agent. Because as a learned friend of mine rightly said, you put a house on the market to get them moved, not to get them marketed. You said that, Brian.
I did. Okay.
So in the last 2 years, on average, 65.5% of properties that have come onto the market on agents' books in Grimsby and Cleethorpes have exchanged. But just have a quick look at this. Let us just for what's name and giggles, just compare the 2 years, okay? So I'm going to, there we go. So from 21 through to November 21 to November 22, on average, 74% of properties were exchanging. Look at this. It's now 56.
Wow.
Okay. So there's one stat that encapsulates the property market. 2 years ago, 7 out of 10 properties you put on the market, you got paid on. Now you're going to get paid on just over 1 in 2.
Wow. That's a big concern, actually. Is there any specific anomaly between in certain companies where there's been a spectacular drop, or has it just been a gradual erosion across the whole market?
Okay, well, let's have a look, okay? So I'm just going to take a photograph of this now, because this is a new bit of kit, which you haven't seen before. And even, okay, so I'm just going to take a photograph now. There we go. Let's move the Stataroonies.
I think it's across the erosion across the entire market.
Right then, here we go. So I'm going to shout out. So I'm going to shout out. We'll compare and contrast different agents, but let's just compare 1 year against another. Okay. So I'm going to shout out the 21 figure, and I want you to shout out the 20.
Yep.
Yeah. So here's the 22 figure for Crofts was 75.8.
56.
No, sorry, my apologies. Was 77.67.
56.6.
Jackson Green and Preston 85.2.
70.
Roost Estate Agents 85.2.
69.9 to 70.
Lovell's 83.
Wow, 57.7.
Argyle's 85.5.
79. I'm rounding up, by the way.
Yeah, that's fine. Joy Walker 83.
70.
Martin Maslin 82.
68.
Strike 72.
49.
Highgate and Crow 92.
81. 82, sorry.
Purple Bricks 86.
Not on your graph.
Reed's Reigns 76.
52.
BMH, sorry.
Yeah, what are they? What were they for you?
Sorry, 75.
59.
DDM 65.
58.
Okay, so
yeah, some have dropped bigger than others, but everyone's dropped. Nobody's up, no one's increased or held.
Now this is very similar to the national picture. So now let's just have just a few minutes just comparing different agencies. So you can quite clearly see here that if we're looking at the top three, number 2 and number 3 have a 7 in 10 chance of getting you moved, whilst Crofts are at 56, so it's just over 1 in 2. Whilst Lovells are at 56 and Joy Walkers are at 70. So therefore, if you've got someone who needs to move, then you can pull these graphs out, these stats out, and actually say, Mrs. Miggins, you have a much greater chance of moving. You know, the difference between 70 and 56, it's not a 15% uplift. It is actually near a 25, early 20s, if you're looking proportional percentages. So, you know, if Jackson Green Preston were going out to a property and saying, Mrs. Miggins, and you're up against Crofts, well, you've got probably a 20% greater chance of moving with us than them, because proportionally that's the same.
Well, yeah, and I mean, this is why, I mean, you know, I don't know how many more times you or anybody needs to tell the industry that if you're not using these statistics in your presentations that you're giving advice to people on, you're showing them, certainly if you look at the bottom thick line of the actual statistics, this is the journey, right, that you are sitting down with somebody and advising them on. If someone says to you, well, you know, why are you charging 1% when Strike do it for free? Well, because 30% of Strike's customers don't actually ever move. So, well, actually more than that, 80%. So that's why. And that's actually why we're 2% or 2.5%. You know, and so you can this is my point about, I joked earlier on about logical certainty, right? People make decisions based on two sorts of certainty, emotional and logic. Most estate agents give them logic and some pretty graphs. And they look at those graphs and think, yeah, lob that over there because I'm never looking at that again. If you're asking questions and giving advice and asking people what they're concerned about, and most of them will tell you actually moving, well, this is about risk. You have less risk with us compared to everybody else. Now it's a question of how much do you want to pay for that reduction in risk? Is that reduction in risk that important to you, Mr. Watkin, that you're prepared to pay an additional 1%? Probably yes. That's why we're double. It is lunacy if you are not giving advice and charging appropriately for it.
What would your message be to the leader of Crofts with the low number of exchanges when you consider that again, last year, let's just pull the stats up, they were comparatively lower as well at 77 compared to their other two competitors at 85.
Would you just move your button off of the Mazda Martin? Sorry, your question was, what would I say if I was Crofts?
Crofts, which is the number one agent. They're at 56, 57. Their two nearest competitors are at 70, 69. Lovells are only at 57 and Joy Walker at 70. So what would your message be to Lovells and Crofts when you consider that their exchange ratios are lower?
Well, the first thing they would need to do, my message to them is you need to have a dive in, get the drains up and have a good look at your statistics, your stats, and what do you understand as causing this? What corrections so the first thing is, before you worry about what you say, you need to understand what the problem is and then have a suitable way to fix that, or a solution for it. The second thing is, I would then make sure that you are scoping your presentations and your advice to your staff around that, because of course, if it's all well and good thinking about your customer, but you should think about your team first. If you're not exchanging as much, therefore you're not making as much money, how are you affecting how's that affecting your team's morale, and so on and so on. And I suspect if you overlaid this with lettings, you might see changes in lettings that might have offset sales. I don't know. And then thirdly, make sure that you are giving advice to your clients and not being afraid of the numbers, but actually being really, really clear about what do you do differently to everybody else? How does that benefit those people? And are every single member of your team, not just your valuers, understand that differential? I had an agency last week, won't say who, won't say where, having this type of chat. And I said, why are you an estate agent? What are your values about? And he went, oh, no. I went, okay, now walk into your office with me on speaker and ask every member of your staff that question. And I bet you none of them answer the way you just done, and none of them did. So, right, so that's all I'm going to leave you with. There's your mission. Go and get your people to understand why you're doing it and the benefits of why someone should sell with you before you go and start telling the public. So it's kind of,
if your colleagues don't know, God help the customers.
Absolutely. They're never going to know, you know?
Okay, so let's go. So again, it shows you fall throughs and price changes. So just we won't go into too much detail there. Okay, now then, let's have a look at this and what happens here. This is again a very detailed graph, but I will explain it and break it down for everyone watching. So the first thing that we've done, that 20EA have looked at, is that they've looked at every single one of these instructions, and they have created an automated valuation model figure, which you would know as a Valpal figure. Other AVMs are available. And what they've done is they compared your original asking price versus what they think the house is worth, and then compared the percentage difference. And you can quite clearly see here that Crofts do value quite tight, which is good to see. So their asking price is 0.38% higher than what they think it's what they think it's worth, whilst Jackson, Green and Preston are at 0.93, Roosts at 169, Lovell's at 199, and then you've got DDM at 4%. It's quite a lot of overvaluing there. But then, because we're in a tougher market, what price is achieved from the original asking price, not the reduced price, and you can quite clearly see here that Crofts are at 5.3%, and we've got Jackson Greens at 5.59, Roosts, they've got 3.5% over the original asking price. Now, if you wanted to work out what the difference is, you take what you could then do is because they make it nice and easy, although it doesn't look easy on this, is this. They say, right, if everyone put the same £200,000 house on in Grimsby in the last year, what would each agent achieve for that property? And Croft and Jackson's would sell the property for, so on average, this is the Grimsby average. All Grimsby agents would sell a £200,000 house for 193,000, which is a reduction of 3.34%. Okay. But if we actually apply that to pound notes, Crofts would get 190,079, Jackson Green 190,575. But Roosts would get 196 and Lovell's would get 194, which means that if I was Roost, Lovell's or Joy Walker, I can actually use this information and say, Mrs. Miggins, according to 20EA Insights data, I will get you an extra £4,000 or £5,000 more than those agents, or I will get you £2,400 more than the Grimsby average. So you're not actually comparing yourself with a competitor. You'll just say, Mrs. Miggins, I will get you £2,500 more than the Grimsby or Cleethorpes average. It's pretty powerful stuff, isn't it?
Yeah. What's interesting about this, actually, just hold on to that screen. If you look at the very bottom, SDL property auctions, you're kind of seeing what we've been saying for the last, well, I don't know, 6 months or so. If you get the pricing right at the very beginning, actually you can actually end up getting a much better result for your client. So if I'm reading this correctly, SDL property auctions, whilst the sample size is low at 18, original asking listed price change is obviously lower, but the actual net result on the far end is the highest on the whole lot.
It is, and you've got to take that with a slight pinch of salt, because the AVM model won't know that it might be a what's name hole, and if you're selling it, and then so you've got to take you have to take the low numbers really with a huge pinch of salt. And again, you've got HomeWise here, who are those agents who put they choose an agent in the town, you put all your properties on at 20% less with those lifetime mortgages. So again, you have to take them with a slight pinch of salt. Yeah. But I think that the magic thing here is that there is data here which proves you get more money for a homeowner, and that's the beautiful thing about this platform. And again, in terms of the way that there are certain ways that you have to, if you're going to publish this, there are certain ways that you have to portray this in your marketing so you don't get into trouble with the ASA. But again, if you take on the 20EA Insights platform, they'll show you how to do that. Again, I'm not paid commission. I just genuinely think it's a game changer, this. Okay, in terms of which agents sell the houses quickest, we can quite clearly see here that there are some agents like DDM that take on average 59 days, because that's new instruction to sale agreed, whilst there are other agents like Jackson, Green and Preston, which take 113 days. And then the pink bit is the number. So you've got new instruction to sale agreed and sale agreed to completion.
That Mayfair estate agent, 407 days.
But again, that might be just one property, because it will just do that. So I think, you know, it does show all the agents. So it's just the bigger agents who are probably more concerned.
Interesting, just Chris, on that point, actually, if you come down by 4, you got for sale by owner. Go back to where you were. Right. Okay, so that's interesting. Now you've now got some statistics to look at. If you go and do this yourself, that's what you're facing. So 91 days without an estate agent involved. So if you are an estate agent, I'd be having a look at that and being a little bit like, hello, hang on a minute. If the seller sells directly to the public themselves, they're doing it quicker than me. And yet our job is to find a buyer. What? Look at some of those numbers.
Intriguing. Right. Okay. Final screen as we look at the rentals. Now, again, this is for the last 2 years. The rental market is a little bit different in terms of the stock because you're just regurgitating your existing stock. So seeing growth of properties and things like that is a little bit more difficult, but it gives you a flavour of which agent is the dominant agent. You quite clearly see here that open rent, as I would expect in a northern town, is quite high at 12%. Looks like Jackson Green, Preston, and Crofts and Lovells are the big daddy-o agents in there. Galaxy of Homes, wow. Big round of applause for them. I love that name.
Best name I've heard for it all year.
Reach Rains, Pie Goats. Okay. Yeah, indeed. So we've got some great agents there, and it just gives you a flavour. I'm just going to take a photograph of that because I'll need that for my social media. Well done, Galaxy of Homes. It gives you a flavour of where the market is, and you can see here what your market share for new listings have been this year compared to new listings last year. But again, there's not much stock coming on the market. I mean, my daytime job is I help letting agents attract landlords to their letting agency. And it is hard work to get people to swap agents, but there are techniques out there, quite good techniques to get a landlord to swap letting agents. But it gives you a flavour of what's happening in the property.
And if you're an estate agent watching this show, don't fall into the trap of thinking, oh, look, it's 77 pence average pound per square foot. That's because obviously the model of the data people here has not changed the square footage to take into account the fact that it's rent.
It is, yeah, that's 77p per square foot for rent, yeah. I don't know why they put that in. I think it's because they did it for the sales, which is great because we as data geeks like that. Yeah. I think it just brought it across. Okay, final thoughts before we leave the ladies and gentlemen.
Well, I just think, you know, we've those people that have started the year and are finishing the year, you know, well done. You know, you stayed in business in what everyone had said, other than us actually, at the end of last year, it's going to be, you know, complete carnage, you know, 2023. Of course, it's a load of rubbish. It hasn't been. You know, I still don't understand these economists, forecasters who think they know crystal balls, and most of them are complete idiots and completely wrong. Thankfully, but the people on the ground in the frontline estate agencies, they understand it. So this is really now, in my opinion, an opportunity for 2024, which we are expecting to be, or expect it to be, a similar market to this year. If it's better than that, happy days. What have you learned? What's worked really well for you? And maybe ask your staff this question before Christmas. Tell me 2 things we haven't been doing that we should start, and tell me 2 things we are doing that we should stop.
And on that note, we will leave the show. As I said, I have no plans to do week 49 unless there's some amazing stats out there. But I do have a plan to do a big end of year special where we're going to try and bring a few of the boys and girls into the show, you know, try and get everyone on. I'm looking into whether we make it live to ask questions. What I would say is this: if you're listening to this and you do have questions, just in case I cannot make it live because of the timings of getting everyone together means it's silly or whatever, then please do email any questions you've got for 2024 of a statistically based nature, both in terms of if you want to talk about house prices. We don't often talk about house prices, but we can talk about those stats or anything else like that. Please email them in to Christopher@ChristopherWatkin, there's no S on the end, .co.uk, or send them to me via YouTube on the messages, or send them through my social media. I'm on LinkedIn and Facebook. Bryan, thank you for your time today. You are certainly a fantastic co-presenter on our shows, and you'll certainly be coming back next year, whether you like it or not. But more importantly, thank you, ladies and gentlemen, for staying with us throughout this year. This started off as a little bit of a pet project. It does take myself and my right-hand lady, Tatiana, at least 5 hours a week to put this together, to film it, to bring it together, and then post-edit it. But I think it's worth it, and it's a great idea. I want to say thank you for 20EA for giving me access to the Insights platform. I want to say thank you to Property Industry Eye for pushing the show. It is appreciated, Mark and Nick and the team there. But more importantly, thank you for watching the show and staying with us. It is my plan to carry on with this show in 2024 to give highlight of what's happening in the UK property market right here, right now. So we'll leave it at that. Wish you a happy Christmas. We'll see you back for the end of year special, unless week 49 is stupid and we have to do one, but I'm not planning to do one. And then we'll return in the new year. We'll probably wait 2 or 3 weeks before we get started, because the first couple of weeks, the numbers are all over the place. But we will start in the new year back, and we'll take it from there. So thank you very much.